Hello everyone, welcome back to this exercise tutorial series for Chapter 9 of our Managerial Accounting course, ACCT 428. In this video, we're going to be working on exercise 9-11A, so let's read this question together. It says, supply the missing information in the following table for Unify Company. And then they're providing us with this table that, as you can see, it only has 4 given data points, and the remaining points are all missing. So we have return on investments, operating assets, operating income, and residual income all missing, right? So based on our knowledge, we can apply some formulas and some rules to get to these missing points. So let's start with the first one, return on investment. If you remember, return on investment, we said that it equals operating income divided by operating assets, right? We also learned another formula for return on investment that equals the operating profit margin multiplied by turnover. And as you can see, both of these are given to us here in the data points that are provided. So we have turnover to be 2.2, and we do have operating profit margin to be 8%. Okay? So to begin with, we'll figure out the return on investment to be equal to the operating profit margin, which is 0.08, multiplied by the turnover, which is 2.2. Okay? Turn to our calculators. 0.08 multiplied by 2.2, that's 0.176, which is equal to 17.6%. Okay? So that's the first missing amount figured out, 17.6%. Okay. Now we want to also find the operating assets, and we can find this by using our turnover number, right? Because from what we've learned in the chapter itself, we also know that turnover equals sales divided by operating assets. Okay? And since we have these figures so far, we do know the turnover number, we do know sales, but we have this missing. So we can substitute in the formula and then manipulate it mathematically to get to the operating assets amount, right? Turnover is 2.2 and sales are 605,000. Okay. We could assume there is a 1 here in the denominator and then cross multiply. Okay, which will mean that $605,000 should equal 2.2 multiplied by the operating assets, and then by dividing both sides by 2.2, we get 605,000 divided by 2.2 equals operating assets. Okay. Now turn to our calculators. 605,000 divided by 2.2. That's operating assets equals $275,000. Okay, so that's the second number that we have figured out. 275,000. Okay, what about operating income? Operating income, we also have a formula for that. Operating profit margin, which we know from the data points that are given, equals operating income divided by sales. Okay. Now we got from the question that the operating profit margin equals 0.08. Which should equal the operating income divided by sales, which is 605,000. Again, doing the same thing, we're going to cross multiply, and that is going to give us 605,000 divided by multiplied by 0.08 should equal the operating income. Okay, turn to our calculators. 605,000 multiplied by 0.08, and that would be 48,000. Let me add one extra page. We're going to need it. Okay, operating income equals $48,400. Okay, we'll add that to our table as well. Okay, what do we still have? The last thing we still have is the residual income. Okay, so let's find that out. Residual income is going to equal the operating income that we just calculated, which is, let's write down the formula first. Operating income minus desired income, which we know that it equals the desired ROR, or required rate of return, okay, multiplied by the operating assets. Okay, now we simply substitute the operating income we figured out in the previous step to be 48,400 minus the desired ROR is 10% multiplied by the return on assets, which we also calculated right here to be $275,000. Okay, now we turn to our calculators. That should equal 48,400 minus 10% of 275,000. That's 27,500. Okay, 48,400 minus our answer from the previous step. That's $20,900. That would be our residual income. Again, we'll go back and add that to our table. Okay. That would be how you could solve a similar question. Again, going back, just to quickly recap, the missing figures are the return on investment, okay, the operating assets, and the operating income. So we cannot really use the formula that we are used to, the original formula, to figure out the return on investments right here. But we do have the ability to use an alternative formula, which is return on investment equals operating profit margin multiplied by turnover. Okay. We also know that the operating profit margin equals operating income divided by sales. And we know that turnover equals sales divided by operating assets. In fact, this is the return on investment equation expansion that we talked about in class. If you guys remember, that return on investment equals operating income divided by sales multiplied by sales divided by the operating assets. Okay, which is basically similar to what we've used here, which is operating profit margin multiplied by turnover. Same thing, right? So knowing this, we used the expansions, we used the turnover formula on its own to figure out the operating assets, and we used the operating profit margin on its own to figure out what is the operating income. Okay, and we filled those 2 points. Finally, the residual income formula, which is the operating income minus the desired income. We know that the desired income is the desired return, required rate of return, and that's multiplied by the operating assets. So we applied that right here. We know the operating income from our previous step to be 48,400 minus the desired rate of return that is given to us in the question to be 10%, multiplied by the operating assets that we calculated, 275,000. From there, we figured out that the residual income is 20,900. All right. I hope this is clear. I hope you found this video useful. As always, if you have any questions, please drop them down in the comments. And until I see you in the next exercise, inshallah, take care.